Hey everybody, welcome. I'm Stephen Kalajian and welcome back to the futures. This is a great half hour and so much to tell you, so much to teach you in technical analysis twice a week, every Tuesday and Thursday from 1:30 to 2. I'm so happy to be here. Tradier Futures, great place to bring your futures accounts and low margin, great rates, and that's what you're looking for, a great home for your futures contracts and futures trading. You know, I celebrated 41 years this August 1st in the industry. And I started with stocks, went to some options, and then went eventually back to stocks, and then went to futures and Forex and obviously equities again. But futures to me is where I think the future is. Number one, the margins are great. You have the ability to trade on the micro level, on the mini level, whether you're trading index futures, gold, oil, financial futures. It's a really great vehicle. And, you know, with the low margins here that Tradier offers, it's just a really great feature to have. So, you know, before I get into technical analysis on what I saw in the markets, we had some monster sell divergences early in the morning when the S&Ps were pushing up to new highs. Remember, on August 5th, we were trading 51.20, and I do a Bloomberg chat, and I remember saying that we were going to get a monster rally in 1 to 2 days, and the S&Ps rallied more than 500 points from that low on August 5th till today. Markets are very overextended here. I am looking for pullbacks in the next 1 to 8 days, and they should make higher lows than that. Higher low means I don't think that 51.20 level is going to get hit here. Now we do have Nvidia's earnings next week on the 28th, next on the 28th. So we'll see some fireworks with that. But relatively, right now, all eyes and ears are on the Jackson Hole. What is Powell going to say in the next couple of days on the outlook of interest rates? With that being said, I always tell people, if you want to master the art if you master the art of divergences, you've mastered the art of trading. As I stated to everybody, there are 5 conditions in the market. These conditions are predicated on my indicator 4 on my software, which you see here on TradingView, and this gives me the ability to see market direction. And there are 5 key conditions. You can have a trend, which we've been doing in the last 7 or 8 days, right? Uptrend, right up, right? Then you have a buy reversal and a sell reversal, and then you have a correlation. You have a disconnect. So you have a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. All these terms all stem from my indicator 4. And when I look at indicator 4, it's predicated on the 3 time frames, the 15, the 30, and the hourly time frame, if you're intraday trading, okay? It's important to note that when you're trading during the U.S. session, looking at the index futures like the NASDAQ, S&P, oil, 30-year bonds, and or gold, what we look at here, it's important to look at the underlying ETF during the U.S. session. If you want to trade the Tokyo and or European sessions, okay, using the software, you can then just trade it independently without looking obviously at the underlying ETFs, because we do not track post-market data or pre-market data, only RTH, which is real-time hours. And there's a method to my madness on that. The data is cleaner, it's better, and I can see the patterns develop. Why do I look at the underlying ETFs when I'm looking at the index futures? Because the math is completely different. And when they align, you better be going in that direction. Meaning the fact that the continuous contracts, index futures, S&P, NASDAQ, oil, gold, 30-year bonds trade over 23 hours in a day, where the underlying ETFs trade from 6.5 hours in a day. So from 9:30 to 4. Okay, so 6.5 hours versus the 23 hours. And when they correlate, meaning when indicator 4 correlates with the continuous contract, or the continuous contract correlates with their ETF, then you better be going in in that direction. There are so many great patterns today. So the market pushed up from the 27 low right before the opening, pushed up all the way up to about 40, I guess about 42, 43, maybe touched 44. But I was calling for monster shorts. Number one, we had significant overbought readings on the 30 and 60-minute time frames. There were sell divergences, not only on the 30 and 60-minute time frames, which I'll show you, but it was a double whammy. We had sell divergences on the 30 and 60-minute time frames on the index futures. And let me show you what I'm looking at here. So here we are, ding, 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 ding. The market opens, and we got the push up right here. And you can see the S&P futures right here pushed up. This is the spiders pushed up here. Okay, and you can see if you draw your horizontal line right here that the price action made a new high right there, but the MACDs were negative, okay, blue over yellow, and the MACDs were nowhere near converging and making a new high with the price action. Very, very important to understand this. If you can master the art of divergences, you've mastered the art of trading. It's very important to fully understand that, okay? Very important to understand that. So when you're looking at the market, okay, and you see these divergences, and I'll even shift it over here to the spiders. So the spiders, the underlying ETF, right? Here he is. You got them push up right here, okay, and look at the MACDs, the non-confirm. You tell me if that MACD confirmed right there. So if you draw your horizontal line right there, the MACDs did not confirm. So it did not confirm on the underlying ETF, and it did not align and confirm on the continuous contract. These are really important patterns. I studied these patterns. You can watch it dynamically, and these patterns repeat themselves. This is a good one. This is a double negative. This is a double sell divergence. Not only did you have a sell divergence on the spiders on the time frames I showed you, okay, it's also predicated on the fact that if you look here, you can see the 60-minute time frames did not. I don't know what happened to my chart here, but the 60-minute time frames right here did not confirm right here. Okay, the 60-minute time frame did not confirm. Okay, there it is. All right, so that's the US dollar. I don't know what happened here. Okay, with this, let me just put the spiders back up here again. Okay, so here it is. So we're making new highs here, and the time frame did not confirm. You can see the MACDs did not confirm on the 60, and you were significantly overbought at that level. Significantly, 97, 98 overbought readings into that sell divergence, and we saw the S&Ps trade from 42, 43 all the way down to the 07, 08 level. It's important to note that when you're trading the markets, right, the way I teach futures is to be able to set your goals in place, to be able, if you go from, and if you're new, right, the number one things that you gotta remember here is that when you're trading the markets, you want to be able to hit your goals, right? You want to be able to hit your goals. And what you want to be able to do is to be able to recognize that when you're trading, you want to go from paper trading to your micros, and from your micros to your big lots, right? If you feel comfortable. And what I do is I tell people, right, that once you hit your goal, the way I would do it is once you hit your goal, then the number one thing is to go back to paper trading, right? And then keep learning, keep getting familiar with the ladder, putting your orders in and scaling into a position, scaling out. You know, there's an art not only to the art of trading, but there's also an art to the way you look at the markets in a way that you can then take your scaling in and scaling out process. So let's say, for example, on the last pattern, S&Ps, you maybe sold 15s, you sold 17s, maybe had an offer at 19. Now, there's no scientific way to do this, meaning it depends on your account, what you're comfortable with. I like to do what is called pyramiding. So maybe you sell, 5 here, 10 here, and then 20 here. Or maybe you sell 2 here, 4 here, and then 8 here if you're doing micros. Or you could do 1, 2, and then 4. Okay, if you want to do 2, maybe 3 or 4 entries. But the one thing I can tell you, and that again, I can't really tell people or advise people what to do, is that to do what's called a single lot entry. So let's say you sold S&Ps at 16 and a half. Now it's 19 bid. Okay, so now depending on the pattern, or maybe you just saw something. Well, you can cover the short, right? If you sold one short at 16 and a half. On a micro, you just lost $2.50, so you lost $12.50 plus maybe $2, maybe $3 round turn. Okay, but and if you lost the big one, well, you lost about $1.25, $125, right? But or if it's a really great pattern, and you and you start seeing, like earlier, I said right around 1140. I'd be looking to buy between, I gave a range 08.5, I believe, to 13.5. And if you bid 13s, you would have gotten filled. And if you bid 11.5 or 12 or 10.5 or 11.5 or anything below 13, you did not get filled. I knew that pattern, and that pattern exploded within 1, 2, 3, 4 bars, 16 points on the S&P. So if you bought one micro, that's $80. If you bought one big one, well, 16 points, right? That's $800. If you went from low to high, I'm just giving you an example. Trading futures offers a lot of leverage, gives you the ability of flexibility. You don't have to worry about the PDT rule, and check with your accountants. There are better tax circumstances when you're trading futures, especially get on your returns, gains, and losses. So check that out as well. It's important to note that when you're trading the futures markets, I mean, today it's slow. We're in August. Everybody's away, right? Friends of mine are in Europe. Friends of mine are over here on a yacht somewhere. Who knows, right? But the point is that when September rolls around and we get this increased volatility back, it's important to really understand that when you're trading the markets, right, you got to be laser focused. It's like being an F-18 fighter pilot, A-22 Raptor. You got to be zeroed in. And I always have a funny quote: hand on the mouse, right? You don't just, in my opinion, you don't just go click, 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 and then go like this and look for the birds or whatever. You got to be always adjusting as it's rallying. I mean, some of these moves are vicious. I mean, if you look at this one bar here on the S&Ps, and I'll show it to you here. S&P futures. Let me just switch to the time frame here. I don't know why I can't switch the time frame here. Oh, let me do it over here. Oh, I can do it here. Okay, okay. Let's see what's going on here. Okay. Okay, so this is the long right here. Okay, this is the long. Okay, so I said I'd look to buy, I think I said 08.5 to 13.5. S&P futures got down to 13. Okay, and by the time if you had put a bid in, okay, based upon the buy divergence that I got there, if you look here, the next bar ran 9 points on the S&P. 9 points. 9 points. So when you get a move of that magnitude, okay, okay, now what can you do? There's always two things you can do. One, you can liquidate, okay. If you bought more than one contract there, maybe you sell one and you keep one and keep raising your stop. Maybe, let's say you bought 2 contracts. I'm just giving an example. Or maybe you bought 2 or 4 micros, right? Well, you just went right up, 13 to 22. Right? So now you're up, just say 9 points on 2 contracts, you're up $45. Okay? Now you can sell one and then raise your stop to 45. And then boom, the next bar pushes all the way up to 29. So now it just ran, excuse me, a total of 16. So maybe you lock in a little bit, and then it goes to 20, 23, 24. You raise your stop to 21. It goes to 25, 26. You can always exit, or you can raise your stop to 24, went to 27, 28, 29. You can sell it, or you raise your stop to 27. Either way, you're going to lock in money. Nobody can get the bottom tick and or the top of the range. It's important to note that when you trade futures, right, I always tell people when you hit your goal every single day I would then go to paper trading. Last week, somebody told me they were up or maybe the week before, they were up $9,000 and they ended up in the red. So you went from positive $9,000 in this market, and then you gave back that and then some, and then go home in the red. Well, I'm very fortunate to say I never did that, and in my 41 years of trading. I started by always achieving and hitting my goal, $100 a day, whether I made that goal in the first hour of the day or by 11, 12, or 1. Regardless, when I hit that goal, I stopped and I watched and I listened. Okay? So it's important understanding futures markets and understanding how you need to have the S&P futures with the spiders and the STSs as the brother and sister, the pro ultra short. So if you look here on the 15-minute time frame today, you can see when we got the overbought condition. Let me just see what time this is. The 5. Let me switch this to the 15. So here we got the overbought condition on the underlying. That's the 1 hour. Why is this still? It's over here. Okay. So the 15-minute time frame reversed to sell. Okay. I knew then by this algorithm reversing to sell that the highs are in for the day, right here. That the highs are in for the day. And then when it pushed in here, I said I'd be looking to buy this against the long on the 30-minute time frame. And I'll show that to you here, the 30-minute right here. So when they got this pullback, okay, when you got this pullback right here, basically you were oversold on the pullback, okay, against the 30-minute time frame. But watch this. Do you see this negative MACD here, blue over yellow? It's above my solid white line, which I call a pivot line. Well, when you got the overbought condition into the negative MACD, you can see what happened. S&Ps went from 29 all the way down to, I believe, 07. So it's important to realize and factor in and to truly understand how when you get these overbought conditions into the negative MACDs. Now, if you want, I'll show you the inverse, the SDSs, and you can see here on the 15-minute time frame. What is this? Let me just change the symbol here. SDS. All right, let me just see another one. SQQ. Maybe that would be better. Okay, the Pro Ultra Short here. So if you look here, you can see the MACDs are positive here. Okay, you can see the MACDs are positive from below my pivot. My algorithm reversed to buy on the 15. The ADX is off. There's no big selling pressure. And when you got the oversold condition into the positive MACD, that confirmed the inverse. That means you could buy the SQQQs, or you can short the NASDAQ. Very, very, very important to understand this. Okay, very important. And anybody has any questions, anybody new, can please feel free to text me or call me at 914-500-7484. It's important to realize and truly comprehend understanding the futures markets. I've been doing this for 41 years. If, again, anybody has any questions, I'm happy to teach futures. I love it. I think, I've taught a lot of my strategies to some of the top hedge fund managers in the world. And for me, there's no greater vehicle to trade. In the pre-market, it's sometimes it's, especially when it's economic numbers, you have phenomenal opportunities in the pre-market. It's important to note that, you always have to be cognizant of an economic news that comes out at 8:30. Whether it's unemployment, whether it's durable goods, CPI, PPI, you have the housing sales, retail sales, and durable goods. So there's like 7 big red numbers each each of the month, and they're spread out through the month. But it's important to know that when these numbers come out, the index futures will be affected, the bond market will be affected, and gold and oil should be affected at times as well. Okay, so there's a lot here in trading futures. If you're a beginner, I would start with the simulator, get acclimated to putting the orders in. Okay, understanding how to put the orders in, how to, if you're trading with the real live data on the sim, and as the market's moving up, you can raise your stop or liquidate a position. Very, very easy. And for me, I think you have to learn that part first. Once you get down the ability to learn the matrix and how to put the orders in, how to be able to adjust the stop orders, okay, and then I would switch to micros and stay there for a while until you feel really super confident. Because once you go to the big ones, you don't want to see yourself get significantly hurt. Okay, where you could buy 3 or 5 contracts and then boom, they drop 20 handles on you. Well, that hurts. That hurts. Okay, that hurts. Does anybody have any questions at all? It's again, my honor. I'm privileged to be able to be here with Tradier Futures. Dan has given me a great opportunity here, and I just want to teach all of you all the knowledge that I have. Again, everything I'm telling you, I have taught some of the top hedge fund managers in the country. Okay, I do look at multiple time frames, which I said are very important. And when I look at the index futures, I do look at the 3-minute, the 5, the 15, the 30, and the hourly charts. And I do use the smaller time frames like the 3, 5, and 15 for entries and exits. Just like I showed you on the SQQQs earlier, this pullback right here into the positive MACD gave me great confidence when the Qs pushed up to 481. Well, guess what? They dropped $2, more than $2. When the Nasdaq got up to the 19,860, well, guess what? The Nasdaq dropped 100. Okay, the Nasdaq dropped 100. Very, very, very important to understand this. That the Nasdaq futures looking at the Qs, and then the S&Ps looking at the spiders, the diamonds looking at the Dow futures looking at the diamonds ETF, and also the RTY futures looking at the IWMs. It's really prudent to be able, if you have the real estate, to be able to have this aligned. Somebody once said to me, Steve, I want to trade the NASDAQ and S&P futures. I'm like, okay, which one? He said, both. I said, well, it's your money. You can do whatever you want. But why not be great at one thing versus good at many, right? Why not be great at one thing versus good at many? So it's important to understand that when you have these multiple time frames called combination theories, combination methodologies, when you look at the indicators I use indicators 1, 3, and 4 85% of the time in my strategies, and then 15% of the time I use indicators 1, 2, 3, and 4. Okay, but I'm able to have the software at my fingertips to be able to do what? To be able to call market direction, to be able to be on the right side of the market, to identify these trades, to identify these patterns, to give me the best bet in making as the markets are moving, to be able to react versus just looking at a tick data. I don't look at candles. A lot of people say to me, how come you don't look at candles, Steve? I can't take the red and the green. And I'm an old school guy, so when I built my software with Billy, I like to have the green bars. I can see it better, and for me, it's really up to it's a preference, right? And I don't like it. Okay, some people like nice cars. Some people just like a car just to get them from here to there. I don't like the green and the red, and I wrote the program and the software, and I forward tested it using the bar data. Okay. Like I said, it's important. My research has shown me, for all you new futures traders here at Tradier Futures, it is critical, based upon my research, that you need to use the underlying ETFs when you're trading the index futures during the U.S. session. If you want, like I said earlier, if you want to trade the Tokyo or European session, that's fine. Okay, it's not a big deal, but you're not going to be getting any data for the underlying ETF like the spiders, the Qs, the Russell, IWMs, or the diamonds. Okay, we start exactly 9:30, ding, 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 and that's when the data is calculated. Even at 8 o'clock in the morning when I'm looking at the market, I can see the patterns on the pre-market, but I do not calculate the data, okay, off the ETFs till the 9:30 opening. Okay, does anybody have any questions at all? We have a few comments. Okay, great. Where are they? I want to answer. We got about 4 minutes. And again, if I don't get to all of them, please somebody, you could text me at 914-500-7484. Very important. Okay. Any idea how to trade the gap up? Yeah, absolutely. So that's a great question. So it depends on the divergences off the 15, 30, and hourly. If you want to just see something here, okay, and I don't have enough time to do this, okay, gap up. So a lot of people say, well, I'm going to wait till 10 o'clock. And I'm like, are you crazy? The best you can make, in my opinion, the best monies are made from 9:30 to like 9:50, right? And it all dictates to the divergences. So today, for example, when we got this big push up, or actually better yet, remember a couple of days ago, last week, we got the PPI number came out and they exploded. Well, we had the gap up, but I said I wouldn't short that gap, okay? Actually, we did short that gap. They were up 5 or 6 on the Qs, but when they pulled in $1.50, I said, that's it. You got the big buying, the big buying pressure on indicator 2. The MACDs were positive, and then the 5-minute time frame got deeply oversold. They pulled in, and they never looked back, and that was probably about 200 handles lower on the S&P. So trading gaps, okay, it doesn't mean that every single gap up is a short, okay, or you wait for a small little pullback for a long, okay. So again, trading the gap ups, and I'm happy that if you have any questions, you can text me and I can go over that 914-500-7484, and I'm happy to go over that because we only got a couple minutes left here. Another question, we said there's a couple more here. And this is great. I love the question. Red, white, and yellow, copper, silver, and gold periodic tables, column 11, first, flat, second, third, the people lower, middle, and upper classes. Red, white, and yellow, copper, silver, and gold periodic table, column 11, first, second, and third, we the people lower, middle, and upper class. I don't know what that means. You want to give me another one? Sorry, Tommy. I don't know what that means. Yeah, it's exactly the if you can really master, like I showed you earlier, I started to show off showing you the 30 and 60-minute time frames when the divergences kicked in on the new highs. I said like this, I let them have them. Let them have them, right? Why did I say let them have them? Because we're extremely overbought based upon my technicals. You're making new highs. And not only did you have non-confirmations, as F2 Futures is saying, but you also had non-confirmations on the underlying ETFs for sell. So you're making new highs, and you were overbought, and the MACDs on both the 30 and 60-minute time frame on the spiders, Qs, and index futures of those same time frames for those assets did not confirm. That's probably one of the best times I saw them both align. I said this. I went during my life session. Let them have them. Next question. We got about a minute. If we have any more, would you consider bring this to Sierra Charts? No, but you can text me. We can talk about it. 914-500-7484. I'll tell you other ways to do this. Anybody else? We got about a minute. Again, Tradier Futures, great place to have your account here. Again, happy to be part of this, and I want to help grow the firm and more so be able to align all of you to be consistent. My 5 keywords, consistency, discipline, confidence, patience, and passion. Thank you so much. I'll see you here Thursday at 1:30. Thank you all. Be consistent and have a great day, and God bless you all. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.